Hey folks, welcome to yet another conversation on Business Redefined, your weekly most comprehensive look at the world of business, finance, and economics. We want to talk about matters sustainability and specifically within the banking and financial services sector. We are privileged to have Mark Mwongela, the guy leading up the Group Director, Strategy and Innovation at KCB Group. Karibu sana, Mark.
Thank you very much.
How's it been?
It's been great. It's been an exciting period for me. I've been here now around 8 months. Really learned a lot, understanding what a financial service, our size, and the impact that it's driving. It's been a very exciting experience for me. Yeah.
And on the exciting bit, one of the things which of course defines the sustainability conversation right now in this sector specifically is the adoption of IFRS S1 and S2 from a reporting perspective. And I'm very curious as to what this has meant for KCB Group. In terms of how you put out your reports when it comes to sustainability and how it's integrated into your business.
Okay. So first I'll say that previously we've been referencing various global frameworks that have been put in place. And you'll realize a lot of financial institutions who are choosing, different frameworks based on what they're doing. And what IFRS S1 and S2 has done is standardize in how we are reporting. So there's sort of a global framework for all of us to adopt. And that way it's comparable, it's possible for us to speak to the same language and really speak to our impact. I think that is one significant impact. Secondly is that as a financial institution, as KCB, what we are learning as we adopt is the things that we need to set up, the rigor around the data and how we collect the data. And now we have to do that at group level. We've been able to identify gaps within our data collection and how we report, and now are working clearly, knowing what we have to achieve by the time we say we fully adopted IFRS S1 and S2. So it's been a journey for us, learning journey, and really excited to have something that leads us and takes us in a global direction.
And from a pipeline perspective, we've seen some landmark deals, KCB Group with the likes of AFDB, etc. How is your green portfolio looking like? How do you intend to scale it?
Yeah, so far what we did is we set ourselves an ambition, and we said, one, we screen all our lending as a business, and then secondly is commit to a number in terms of our green lending portfolio. And what we've set ourselves as a target is a 25% lending target. And what that means is we take every opportunity to look as we lend to a business. Are we lending sustainably? Are we making sure that where the money is going, is that financing going to a sustainable initiative? And also being intentional about lending to specific initiatives, especially some sectors, renewable energy. When you think about climate change, clean energy, we've been able to identify areas where green lending has a demand and commit intentionally to drive that. So to date, 25% of our portfolio is a target that we have, which we feel is an ambition that we are ready to match up.
And how far are you from the 25?
As per, I think, our 2024 sustainability report, we had achieved, I think, 21% as far as our 2024 sustainability report is. And we look to measure up to the 25% this year.
It sounds as though increasingly then your lending will kind of skew towards being sector agnostic. Would that be a fair assessment as you keep your eye on the 25% target?
Yeah, so I think largely yes. And I think what we did is for us to be able to achieve a goal is set out clear metrics around the sectors we are familiar with. I think agriculture, when you think about farming, when you think about renewable energy. There are a lot of the customers that we serve today, when you think about schools, that are looking for renewable energy solutions. And because we are familiar with these sectors, we said, let's be intentional about this initially. But then as we offer services across individuals, small businesses, large corporates, public institutions, then it opens up to more sectors. And as more businesses, more individuals understand what is in it for them in terms of sustainability, then it's only a matter of time before it's agnostic and it becomes part of our business as usual.
Is there any stark variation you would say you are seeing between the green book and, if I could call it, the other book when it comes to things like asset quality?
Yeah, absolutely. I think one, because of the businesses that we are targeting initially, these are businesses that are conscious about cost, conscious about their sustainability. And so the moment you engage a business, and then let me speak about the Green Lending book and give an example, an agricultural business involved in horticulture, where they have to export their agricultural produce, have had a huge challenge around waste. And so when you meet a lot of those businesses and you engage on some of the products that we have, enabling them to can their products, is that now you're enabling that business to actually be more sustainable, and means they can actually meet their repayments. And so it really has enabled us to build a quality book, because these are businesses that are conscious about their long-term existence, the long-term health of their business. And so you get a lot more quality asset book compared to, the rest
other
of
book.
Yes. If I simplify it that way.
So Mark, we have seen in the recent past a lot of focus on raising capital towards green financing.
Yeah.
Most notably, Kenya's largest corporate bond issuance in the recent past by the telco is precisely on that.
Yeah.
Is that an option on the table for you, especially seeing where the yield environment is? Do you consider that as an option?
I'd say we've looked at many options. We've looked at issuing green bonds ourselves. I think we've done that successfully in Tanzania. We've also explored partnerships. I think I'll speak more into partnerships. We are today the only financial institution that is in partnership with GCF around green financing.
Yeah.
And we found the area of partnerships. If you look also what we've been able to do with the MasterCard Foundation, there are a lot of DFIs that are looking at how to deploy their funding, concessional funding, grants for some of them, guarantees for others. And we, given our size, our network, scale of network, all the way to the rural areas, we really provide that good base for a lot of the DFIs. So I'd say partnerships has been a big area for us. We've issued green loan bonds, and we'll continue to explore as many options as we see available.
Okay,
Yeah.
Fair enough on that point. On partnerships, by the way, now that you brought that up, we've seen some announcements from KCB in the recent past. The Riverbank, for instance. And I was very curious. First of all, let's start from here. Help us understand where the group is coming from with those acquisitions, those JV arrangements and the partnerships.
Yeah. So I'll say largely as a business, we appreciate the value that partnerships can enable us to drive further. And if you pick some of the partnerships that we've had so far with telcos, with some of the fintechs, they've really enabled us to tap into areas that, as a bank our size, it's not easy for us to be agile to reach those areas. So if you take Riverbank, for instance, a really solid development house, a product house that was already offering solutions to KCB. And we felt that together, if we come together with a stronger value proposition, we're able to drive value much more than a Riverbank being a vendor. And so acquiring Riverbank was showing our intent to really build the ecosystem and be an enabler, because the products that we're building together with Riverbank really drive value for the community. Business tools, consumers being able to access digital services through agent banking. That remains a principle for us. If you take even the recent minority stake in Pesapal, it is looking at the payment space, looking at the collection space and how the fintech space is growing. We felt that that partnership will create much more value if we come together and build more strategic value in the market. Yeah, I think that will remain. And so overall partnerships remain really principal to the work we do. Now, some of them will be acquisitions. Some of them will be joint ventures. We've done that for a long time with telcos. Other times we'll be an enabler. And if you look at some of the tools that we've put out from our digital financial services, are tools that partners can access today. If you're a fintech that is building a product that is targeting consumers or targeting businesses, we do offer a whole value of digital tools that you can use. And so partnerships are really core to our growth. Yeah.
On the second one, which is Pesapal, Mark, in a previous life when I was handling transaction advisory, we always asked ourselves, why would you want to be a minority?
Yeah.
Because if you're coming in with proper skin in the game, And I'm just curious, why a minority?
I think sometimes you want to invest in acquisitions that you also let the value that was already existing with the partner continue. And when you look at a lot of these fintechs, they're very agile. They move fast, they make decisions pretty quickly. They are less and less bureaucratic and risk. They're really moving fast. And so to make sure that you don't add the weight that we already have with banking our size and all we carry, is that you support them, but you still give them the room to continue to be the business that they've been. And I think that will inform a lot, and you'll see that will inform a lot of our decisions on acquisitions going forward.
So Mark, here you are. When you look at the payments ecosystem, and given your background, a lot of us, well, let me say, personally, I still feel payments in this ecosystem are a bit quite fragmented.
Yeah.
And I'm just curious, from where you sit, what do you see as the path forward? I'll give you an example. 3 years ago, the central bank rolled out this national QR standards.
Yeah.
We still haven't seen as much traction. And the whole discussion was about interoperability.
Yeah.
How do we take this forward?
So first I'll give context into where we find ourselves. And I think it's a result of a healthy market that enables every institution that has the ability to innovate to go ahead and try. And so where we find ourselves is that you have a lot of fragmentation in payments. How the banks manage payments is possibly not the way the telcos manage payments. Is different from how fintechs have. And it really reflects when global players try to come into this market. They find that they have a challenge to really understand. So it just speaks into the context of our market in how it's enabled innovation to happen. Now, as a result of that, then it means that there is a lack of a standard of how money moves, how everybody knows their way of money movement based on what is their primary function or service. So there's an opportunity to really think, how do we move forward in a way that there's a standard? And I know right now there's a lot of initiative driven by the regulator, backed by the government, to build a standard way of payments in Kenya. And I think it is a good move. If you look at some of the mature markets, South Africa, Nigeria, India, a lot of success has been achieved by building a national level payment infrastructure that supports all and then still allows layers and value for those who want to continue to innovate beyond. So I think in the future we will see a lot of success in that coming together of the national payments infrastructure.
You know, I had a trip to India, and I was really blown away by first of all, the scale of the digital payments and just how interoperable the whole payment ecosystem is. Let's go back to the conversation around sustainability. The green taxonomy, which we saw coming from the central bank, just how much of a game change, if I could put it that way, has it been, especially for persons like yourself who are now leading these institutions on that subject?
Yeah, so I think one of the things to appreciate about it is that it's created first an overarching view on governance, which is really principle when you want to drive an initiative at that level. So the oversight functions within financial institutions has been prescribed in, what do you have in your board to really speak into sustainability? And then how then you go around to build your programs, to build the what I would call the disclosures, the disclosures that are required in a standard way, but also in a localized way. So it's provided that very localized context for us as a financial institution. And it really works well for us as KCB because we want to embed sustainability into what we do. And so now at a governance level, at different levels of functions, at the different functions, we now work together towards building a sustainability future. Yeah.
Do you sometimes feel like we have a trade-off between sustainability and return?
Yes. I want to say yes and no. I want to say yes. I will not say no. I want to say yes, we do have. And I think it's a challenge. It's a genuine challenge that if you have a sustainability initiative that in the end does not have economic value, then its long-term benefit is questionable. And I'll give you an example. We talk about e-mobility. And one of the initiatives that we have as KCB is to enable the motorbike guys, the motorbike guys to be able to move from the fuel to e-bikes. And the genuine challenge remains that if by moving they do not see a change in their economic value, then they almost will, continue to stay with what they hold today in terms of the fuel-based bikes. And so it remains a challenge that as you build sustainability initiatives or programs, you can't ignore the economic value, because its viability then really speaks into the long-term benefit and sustainability of the initiative as well.
We've seen quite some venture by KCB around schools and the education sector. Yeah. Give us more color around that.
Yeah, and I think it's really, it come around because we've spent time understanding our customers. We do, as one of the largest banks in this region, we do serve a lot of schools, and we get to understand the challenges they have around energy, around what they use to cook, the sources of cooking. And so what we've done with schools is spend time building solutions that help them address these challenges, these environmental challenges. And so we rolled out a solar product that goes to enable a lot of schools to transition from electricity to solar, basically reducing the cost for them. And we've gone further and look at clean energy cooking as one of the options as well, to really provide the right environment whenever they are preparing food within such environments. And so we've seen a huge impact. So far, we've been able to serve over 147 schools. We have a pipeline of 900. The government has given us a challenge to cover the whole base of public institutions, and really proud of what we've been able to do, lend over 400 million to really support a lot of these schools. And we've seen the change, we've seen the positive impact.
Wonderful. Yeah. As you lead transformation, every bank executive I've spoken to in 2025 told me one of the key pillars they're seeing defining transformation in 2025 and 2026 is AI and AI adoption. Yeah. How is it playing out for you?
Yeah, it's a very interesting subject, specifically because it's a one area that has just moved exponentially in terms of 2-3 years ago. AI was a conversation of a few. Right now, AI is possibly on every person's device. If you're holding a digital device of any nature, phone, laptop, you already have AI in some form. And it's been exciting for us because some of the things, and if I speak, let's say, in terms of operations, we really desire to improve our operational efficiency so that we can serve our customers better. And so being able to see how AI has been able to come and change some of the processes that we had, when you think about customer support functions, where you expect when a customer calls you, they could call you about a myriad of 200 plus products that we have. A customer service agent is now able to get information real time, depending on what the customer is actually seeking, without having to have expert knowledge about that product or memory of that product. And we're even seeing further use cases where we can take that and present it to customers so that they never need to call. They can just get that support within their digital tools and digital platforms that we've enabled. And so it's really one of those technologies that is changing across our operations, the way we interact with customers, and even enabling us to build new products. So one of the interesting things that we're doing in 2026 is trialing how AI can actually build products for customers. And rather than sit down and build a whole waterfall process with engineers, you have AI identifying areas in which that it can improve, and it will actually build what is required in that case to solve the problem, whether it is for customers or also for internal operations. So it's mind-changing, mind-boggling. I think it's just seeing the impact that AI has is really significant. It's exciting to watch.
Regarding AI and internal processes, is credit risk profiling one of it?
Absolutely. Absolutely, and it's an area that I think has been challenged the most in how banks profile customers. How do you go beyond what we've known for the longest time, security,
and asking us for logbooks,
and asking for your balance? Let me see how how do you go beyond? That is a very interesting area, and AI enables us to see behavioral patterns beyond what we've known in terms of just the conventional, traditional ways of profiling for credit. So it's absolutely a play area in terms of AI use cases.
As you look into 2026, I'm just curious and I know you've already touched on AI and what we can expect from that, but what do you expect to be the key trends shaping the sustainability conversation? One of the things which has dominated focus in 2025 is the question we've been asking whether TNFD now is IFRS S3 in waiting, and what that would mean for players like banks and other financial services. I'm curious, top of mind, what would be your priority?
So let me start by saying that last year, what we did is we referenced IFRS S1, S2, just to gauge where we are with our reporting, and after identifying those gaps, then establish exactly what we have to do to issue an IFRS S1, S2 compliant report. And so this year, that's actually what we've set ourselves up as a target. What we are seeing with a lot of these standards is they're requiring rigor. They're asking us to be more accountable. They're increasing the depth of how we report. So our reporting is not just our intent. It's actually speaking to the actual impact that we have had, which I feel will really impact the way sustainability conversation is happening, to move further and further away from what we intend to do, to more and more to actually show what the sustainability efforts, every financial institution, KCB included, is actually delivering to the community, which is, I believe, the right approach as far as sustainability is concerned.
We have been having a conversation with Mr. Mark Mwongela, this Director, Strategy and Innovation at KCB Group. We began with a focus on sustainability standards and what that has meant for the bank and for the sector. We have spoken around a raft of issues, including AI. We've talked about payments and the interoperability in the market, and finally giving us some green shoots into 2026 and what is likely to shape the sustainability conversation. We shall continue highlighting these issues as and when they unfold. So keep it business redefined.